What's up, everybody? It is Brandon Lowkaran, and today we are talking about why real estate is the best investment, especially in a down economy. So, as you guys have known, we are in a downturn in the economy. Believe it or not, whether or not you believe this news media or not, we are in a recession because when you look at gas prices, when you look at food at the grocery stores, anything you need to purchase, inflation has definitely gone rampant, and things have cost almost twice as much as what they were 2, 3, 4 years ago. Now, I was in California about a week ago, and gas prices over there are ridiculous. I saw gas prices with my own eyes for $6 a gallon, $7 a gallon, and I'm in Northern Virginia, right? And there are things sometimes where it's close to $5 a gallon for premium, and it has gone crazy, right? I remember when gas prices were about $2, $3 a gallon, and that was cool, but now gas has gone rampant. So that's always a good factor to look at, especially when you're evaluating the economy, because if fuel prices are going up, everything else is going to be affected. And what I mean by that, when you think about it, shipping lanes and shipping trucks and, boats and everything like that, they run on fuel, they run on gas. So you will start seeing costs on other things go up because of fuel costs. Energy cost is probably the number one factor for driving what things cost, because they got to ship food, they got to ship clothes, they got to ship, everything. So if fuel prices go up, those things will internally then go up because the food companies are spending more. The whatever you're buying, Amazon spending more on shipping because UPS, is charging more because their fuel is going up, that kind of thing. So I wanted to talk to you guys today about why real estate is probably the best investment to hedge against a down economy. It's proven time and time again in each downturn. It is very resilient, and I'm going to talk to you guys why. So first of all, number one reason is it's a tangible asset. And what does that mean? Well, just like gold is a tangible asset, it really maintains its value, right? So real estate is a physical asset that retains intrinsic value regardless of economic conditions, right? So what I mean by that is, let's say we're going in a downturn, what's going to happen to your stocks is it could go down as well, right? Because that's how people judge if we're in a down economy or not, or if things are turning down, is they look at their stock price, they look at their stock portfolio. So real estate is a tangible asset. Here's the thing. Even though gold is also a tangible asset, or silver, you can't live in gold, right? But in real estate, you could live in it. And gold, while it does go up in value, so does real estate, but you could live in it. The other reason that we're going to get to next is you could rent it out. So it's a tangible asset that continues to make you money, and it goes up in value. The other thing too is we're going to get to it. So stable cash flow. The other thing is stable cash flow. Cash flow is all about really providing a return every single month. So as your value of your real estate is going up, like we talked about, it's a tangible asset. It provides stable cash flow. So cash flow continues to help move and really hedge against the economy, especially instead of your asset just sitting there. If you have gold just sitting there, you can't really go out and rent it out, right? I mean, you could start a bank if you have enough of it and you want to become the banking industry. But basically you could essentially rent out your property. It provides stable cash flow, and you still have the asset, which is continuing to go up in value, which is appreciation over time. So appreciation in the value of it, believe it or not, pretty much every single property since the 2007, 2006 market crisis, everything has rebounded. So real estate continues to appreciate long term, and it helps build equity, even though the market is volatile. So think about that. It continues to appreciate in value, goes up in value, especially as you're paying it down. Think about, with the cash flow, let's say you rent it out, your tenant is continuing to pay down that mortgage. They're paying it off for you, not to mention the market is continuing to appreciate. So you're making money both ways. So just think about that. It's a great way to hedge your bet, especially when you're in a downturn economy like we are in right now. So the other main thing is tax benefits. Tax benefits is probably the best reason to own real estate, guys, because you could actually do what's called accelerated depreciation and write off the value of what the asset would cost to rebuild, right? So if you own a single family home that's an investment property, or a multifamily or a commercial building, you could actually have tax benefits that allows you to write off or depreciate that asset over the course of the years. So depending on whether you're commercial or residential, it's divided up on a specific time frame, but there's so many tax benefits, right? So you can do obviously you could deduct mortgage interest, you could do the property depreciation, and any other operational expenses. So for instance, if you run an Airbnb, you could take out whatever it costs to clean it, whatever it costs to provide food or coffee or whatever else it may be. You could do all that with those tax benefits. Obviously, consult with your tax accountant. I'm not an accountant. I'll preface that, but definitely consult with yours and see what you can write off. The other thing too is it's an inflation hedge, right? So right now inflation is right around, I don't know, 4-6%, something like that. I believe it's probably closer to 18% when you factor back in food and energy costs, like we talked about earlier. A lot of those things they've taken out, which I don't agree with. But real estate is something that continues to go up. So think about this, right? You have a property that's going up about 8% in value every single year, nationwide. And in some areas, you've seen as much as 18% or even 24%. Again, I was just in California last week, and San Diego is one of the wealthiest, most expensive counties to live in the United States. When you think about that, that's crazy, right? So their real estate prices are going up. I was talking to a guy, and he was talking about, he's like, yeah, you could buy a really nice $2 million house in my neighborhood for about $5 million, right? And it's a joke, but it's like, it shows you exactly how much real estate is continuing to appreciate, even in places like California. So it's an inflation hedge. And what that means is, again, your property value is going up at pretty rapid rate, right? Especially since the starvation of inventory on the market. So it's continuing to go up. And not to mention, when you have a renter in there, they can pay it off. They can help pay down that mortgage. So as inflation builds and as your property value builds, it's a great hedge against inflation. The other thing too is that you have greater control over your investment. So with real estate, it's a tactile investment. You own a piece of the earth, which, hey, God's not making any more land, okay? So real estate is probably one of the best investments in terms of control. Like, you don't have to go through a broker to get access to your account to cash out. Or you don't have to say, oh, let me log into my account and see what my real estate's doing. You could drive up to it, you could walk by it, do whatever you want. You can see it when and see it go up in value. A lot of people track it online with Zillow or Realtor or whatever it is, but they track the value, so they could see that going up. Versus stocks, it's really just left to really an open market where there's buyers and sellers on both sides, and if the sellers are more than the buyers, then it's going to go down, right? But real estate is always going to be that structured demand. So the other thing with real estate is you can leverage it, right? So you could leverage it a lot easier than you can with your stock account or your portfolio account, because you could go to the bank and say, hey, look, I've got this asset that's worth $1 million and I only owe $200,000. Can you lend me some more money on it? And they'll say, yeah, absolutely. Let's do that, because they want to do more loans. And then you can take that money and leverage it and buy additional assets, because that's going to continue to help your net worth increase. So here's the thing. Ultimately, it's great diversification. I'm not telling you that only invest in real estate, but that's what I pretty much only invest in. I only invest in real estate or real estate-based assets because, it really is a tactile investment. It really helps your wealth grow, and I can see it. It's also what I know. So if you guys know something else, you should stick to it, right? However, I just tell people, especially if they only invest in stocks, that they should diversify and they should look at real estate, not only because of the tax benefits, but because it's more tactile, and real estate has really hold the test of time. Okay. So guys, I know this video was helpful to you. So hit that subscribe button below, like, follow, comment, and let me know what your thoughts are. Let me know what benefits or drawbacks you think real estate has to do with it as an investment. Anyways, I'll see you guys on the next one. Peace out.